And good afternoon. Welcome into Market Talk for Thursday, January 7th, 2021. Great to be with you. Jesse Allen here, your host. Happy New Year, markettalkag.com. That is where you can find us, our home on the web. It's markettalkag.com. Facebook, Twitter, Instagram, our handle. It's the same at Market Talk Ag on all of our social media. Well, a interesting day in the grain trade today. We saw a little bit of a lower trade. And let's talk about all that and more. We'll bring in our good friend John Heinberg with Total Farm Marketing by Stewart-Peterson. John, good to see you.
Good to see you too again, Jesse.
John, an interesting day, as I mentioned, seemed like maybe a little bit of a technical correction. I know we're going to dive deeper into the upcoming WASDE report and stuff in a little bit, but I want to start with today's trade. You know, we finished off the lows, which I think was a good thing in soybeans and corn and wheat, but it just seemed like maybe a needed correction in this market today. What are some of your thoughts overall with what we saw on Thursday?
Yeah, market might be starting to anticipate that report next week on the 12th. Obviously, we're going to get a ton of numbers in front of us here with the USDA coming out with grain stocks as well as the WASDE report or crop production report. So, those markets put a lot of premium into it. So it's probably a very logical spot to maybe take a little bit of a pause here. So that's what we're keeping an eye on. But again, today, here's this market drifting back in the overnight session. We hit some key support levels. We have March beans basically trade around the 1345 area for about 4 hours straight before getting a little bit of a bid at the end of the day. And same thing with corn. It just kind of felt like the sellers just kind of ran out of gas here about midday. And next thing you know, we start climbing a little bit higher. So the markets are very, very volatile. It's kind of hard to believe when you get to a 6-cent day or like yesterday's 15-cent update, you say it only moved 15 cents or so. So it's kind of a different feel right now overall, just given the volatility that's in that market.
Yeah, well, and looking as well, at this market overall, and specifically, soybeans, like we mentioned, we kind of came back towards the end, and corn as well. We kind of came back towards the end. I mean, thinking about just the run up that we've seen, we saw weekly export inspections. They were soft for corn, beans, and wheat today. I think overall, most people probably looking at this and going, okay, well, the down day could have been worse today.
Yeah, very well could have. And, again, we saw some of the overnight weakness, and it was nice to see the market move up off of those lows. As you kind of referenced, today was export sales numbers days, and obviously Christmas week comes into play. But, on the bean front, we saw some cancellation of some about 5 or 6 cargoes from China. So that kind of put a little bit of a tone into the market. And again, they're extremely low in terms of sales numbers on the books today. And with that, here we had an export sale this morning for 1350 beans. So, to unknown destinations. And somebody stepped in and bought some beans for 2021-22 marketing year. So again, at the same time, you got a market saying, hey, we want to ration supplies and we need to really tighten up here because we just don't know what we're going to have. But apparently at 1350, somebody's still in the export business trying to buy U.S. beans. On the corn front, same type of thing. Still a solid, decent week of sales, but again, shortened up by the Christmas holiday. I'm watching the shipment totals. We need to start seeing them move out and getting this product put on a boat and get it out of here. It's been obviously competing with beans. So we're really starting to wonder, are we getting maybe to a top as we spiked out at the $5 mark here this week? It's a big psychological barrier. Maybe we need a little bit of news to push through that window for this market to work higher.
Yeah, and we think about it and looking at corn, I mean, we still remain the cheapest globally compared to China and South America here in the US. And I think that's something to remember as well and look at. And I think with this corn market overall, I'll get your thoughts on it. But looking after today, slightly lower, we're still hovering just below that psychological mark of $5. But it still seems like there's a lot of room for opportunity leading up to these reports next week for some corn marketing.
Get some good value out there. And I've been feeling that question a lot lately is like, should I sell a little bit here? Should I move some more corn? I mean, we're at 495 on the board. Now, that's a pretty doggone good price considering where we were back in August. And, guys have been sitting patiently if they've got some supplies to work through. We're going into a major report here next week with a lot of volatility, a lot of numbers, a lot of things that could go one way or another. It's probably a great window to go ahead and move some risk off and make some cash sales in this window. If you want to stay in the market, keep a little bit on the top side on a call strategy. At least you got something in play. Or if you want to just build some floor floor underneath. Just look at some shorter term puts just to make sure something doesn't go haywire on Tuesday. And the next thing you know, this market goes from 495 down to 465 again. And then we're starting over. So, it's a window that, again, even with beans, you got opportunity in front of you. You got good value. Maybe move a little bit of risk off going into this report. And if you want to stay in the market, find a way to stay owned to the longer term.
On the wheat side of the equation, real quick, after today, we were down moderately. Hearing some rumors. Argentina might suspend some wheat exports. There's talk of lower wheat production in South America. South American weather overall is something we continue to watch. Mato Grosso is still just too dry down there right now. But looking at wheat specifically and just taking a stock of this market after today, any thoughts you want to share there?
We've had a pretty good overall run in the wheat market and obviously, pushed it up to the 660 window to start the week. So, like you said, probably some profit taking. Realistically, fundamentally, on the global scale, wheat's probably the one market that doesn't have the supply story that it has that needs to make a really good, a stronger move. Wheat's acting a little bit more of a follower to the other grains, and as we see weakness, they take a little bit of pressure off that wheat market a little bit faster. So there's still some things we got to watch. What, like you mentioned, what's going to happen in terms of acreage here in the U.S. That will come out on the report on Tuesday, the wheat planting acreage. So that's going to be a number that'll be closely watched, and obviously where we are in the terms of the southwestern plains and dryness. So there's still some stories building. The chart still looks good in the wheat market if we can kind of hold support here. And next thing you know, if we see the grains moving higher again, wheat's probably still going to get a bid. The last thing it comes to all these commodity markets, and especially wheat being one of the more inflationary based ones, where's that US dollar at? What's it been doing? Recently, obviously, we've been pretty choppy this week, went and challenged some support, working a little bit higher. So that might be showing a little bit of pressure also in that wheat market.
Okay, John, Tuesday, we got all these USDA reports that are coming up, and it's something that we've been talking about for weeks. We've kind of set it as that next big point in this market trade and could set the tone here for the next few months moving forward. What are your thoughts? Maybe what are some of the things, some of the numbers you are seeing as we head into this report? Why don't we start with corn?
Sure, you're looking at the corn market. Obviously, two things come into play, and I'm looking at some of the estimates that trade is putting out there. And the supply side, if these numbers come through, aren't probably as bad as everybody's making out to. It makes me a little bit cautious of 490 corn in terms of the price. Expectations for carry out to come down to about 600 or 1.6 billion bushels, or just a little bit under that. That's down 180 million bushels, so it's a pretty significant cut. But you're hearing whispers of the trade possibly pricing in a 1.2, 1.3 number down the road. So if we accomplish those numbers there, that could tell us right now it's 490 corn a little high. Another reason I'm a little bit cautious right at this moment. Biggest things, what happens with the yield? We're expecting to see about half a bushel per acre or so come off of that December totals. Again, putting a little bit of pressure in terms of the supply side of the equation. And then it comes down sometimes to grain stocks, and that can really be the mover in this market. Expectations are for it to be about just under 12 billion bushel available corn supply out there. Just give you a comparison, last year it was about 11.3. So again, that kind of tells us maybe the supply side of the equation in corn isn't as bad as we think it is, at least from what the media is making out to. So what's going to be the big push here is what does the USDA do with the demand side of the equation? And that's going to be basically the elephant in the room. They didn't do anything on export demand in terms of the December report. What will they do with that in terms of the January numbers? Obviously, sales are at a record pace. Shipments, basically some of the best we've seen in the last handful of years, but not at a record pace at this time frame. So that could be a bit of a wild card. And then what does the USDA do with ethanol? Obviously, we're still running 9-10% under last year at this window. So there's some areas that they could still keep the supply side of the equation a little bit more comfortable. So that makes me a little cautious this corn market, especially as hard as we've run up into this report next week.
Now on soybeans, we keep hearing how producers, here in the US, they don't have any beans to sell. They're running out. We keep hearing about the supply side of this equation and demand heading into this report next week. What are you seeing in soybeans?
There it's going to be about that U.S. carryout number. Technically we need about 140 million bushels in the pipeline just to be considered adequate, at least the bushels available. And right now the expectation is for the carryout number to come under that, about 139, 135 million bushels. That's going to be, if realized, when we put it into a stocks to use ratio, will actually be our tightest stocks to use ratio in history, even taking out those years of 13 and 2013 and 14. So that's going to be elevating in price if that does get realized. Again, how's that going to happen? We're going to shave maybe a little bit more off in terms of production on the yield side of the equation. And then what do we do on the demand side? Does USDA make some more adjustments there? They added some more demand into the crush numbers on the December report. Didn't touch the export side. Realistically, they probably could shave some more there. So this one could be interesting. The low end of expectations has this all the way down to basically 100 million bushels, which would be historically low for this time of year. So if that's the case, we are at 1350. And realistically, that means we're probably still undervalued if we get to those types of numbers in terms of supply. So that's what we're going to be really watching in that regard. We're at a stage now, we're down to every tick on a yield or every million bushels on export demand is a big million bushels, and it's going to move the needle in terms of that soybean market. So we'll have to really watch that and see what the USDA comes out with. And don't be shocked, we see a pretty volatile day in that soybean market, especially if it gets realized and those numbers are tighter than the market is anticipating.
And John, on the wheat side, looking at we got the carryout numbers coming up. We got those winter wheat seedings. Everything I've seen for average estimates seems to be pretty much dead in the middle on all of these. But what are you seeing on wheat futures as we move, or on the wheat side of the equation as we move into that report?
The wheat market, again, will probably be a bit of a follower to the other grains based on the strength. But, we're watching that winter wheat acreage, about 31.5 million acres being the estimate. Last year we were about 30.5 million, just a little bit under that. So we expect a few more acres to come into play. But, when we start talking about the quarterly grain stocks, we could be down about 100 million bushels to improve versus last year, just on some improved demand. So that could keep a little bit of boost in this market. Again, when we start thinking about the wheat picture, we got to start seeing where we are on the global scale. And that's still going to be the big factor. Global wheat stockpiles, about 315 million metric tons is what we're expecting. That's going to be down about 1.5 million from last month. So we'll have to see how that plays out. That was a number that was a little bit supportive. It was a little bit below expectations in terms of the report last month. So that'll be a good sign of where we are in the global stockpiles. U.S. is realistically number 4 in the world in terms of wheat production. We're obviously not the world's largest exporter. So we may a bit more of an influence on the U.S. price based on what happens in those global numbers.
A lot of things to consider, and we'll be watching those reports when they come up on Tuesday. John, let's go back to livestock and talk about that market here real quick. Decent day on Thursday in cattle and hogs. We tried to maybe find some support, it seemed like. First on cattle, anything there you're seeing that we need to watch out for?
Well, right now we're waiting for cash trade to get going this week. It's been just dead in the water with very minor trade out there, a little bit around 112, which is steady with last week. Just talking to people, it just seems like the bids aren't out there. And here we are late Thursday afternoon, and typically this is kind of the day we get some triggers moving. So we'll see if the Packers going to step up to the plate, maybe raise those bids up a little bit tomorrow and get some trade in, or they're going to sit a little short bought going into next week. The market, we had a snapback on Tuesday after a tough day on Monday, and basically since then we haven't gotten anywhere in terms of that February contract. In fact, today's trading range was 70 cents, 80 cents today from high to low. That's pretty quiet in a cattle market. So that's what I think we're waiting for there. Right now we're still dealing with some heavier weight cattle. We're running about 10, 15 pounds over last year, but that is starting to trend lower. So at least maybe we're working through these heavier cattle. That's keeping a lid on this February price. The market's anticipating that again. The last couple of days, we've seen, mild strength from April on in terms of the deferred contracts. Got the same again today. And, it's encouraging. You go look at June and you go look at August, we're pushing to new highs, and the market just is building a strong 45-degree climb higher. Still really like the third and fourth quarter in terms of price here. I mean, obviously we're looking at cattle numbers being down in 2021. Now you throw the costs in there of extra corn in terms of these prices. That might even tighten up the supply picture more, or lighten up those weights more. And next thing you know, you got a market that's looking for beef. I mean, everybody says grain prices are detrimental to cattle prices, but if you remember, when we had $6 corn back in 13 and 14, where were cattle prices? 150, 160, 170, so that could come into play. And maybe we're seeing a little bit of that also happening into the hog market as well.
Yeah, and you mentioned feedlot country this week. I mean, I saw a sale of 50 head in Iowa, about $2 higher than what we saw last week, but that's really nothing in the grand scheme of things. And that's a great point you mentioned about looking out to that third and fourth quarter, and if we continue to have high corn prices, might see this cattle market move higher. Hogs, you mentioned that there a little bit as well, and I know we've kind of had some psychological barriers, it seems, at hogs around that $72, $73 mark, trying to bust through that in the front month and really just not having any luck. And hogs, I know, kind of just been up and down, pretty volatile this week. What are you seeing over in the hog complex?
Now you got to break the hog market down into two segments. Let's talk with the near-term contracts, February and April. Like you mentioned, we're struggling to get through the October highs. We failed there yesterday. Actually, put a bit of a negative sell signal into those contracts. Right now, it's just about the supply of hogs out there. Slaughter runs are running heavy with last year's pace. Weights are still high. Even though the demand is really good in terms of we're moving product out, we see strong export sales. In fact, export sales for 2020 were 16% above the previous year. So that's encouraging to see. But right now, the Packers got a lot of choices in terms of hogs out there. So there's not a lot of urgency to lift cash prices, and that's keeping a bit of pressure on those front months. On the flip side, you got those deferred contracts. Nice move. A little bit ugly on the charts yesterday, but it was good to see us kind of snap back and re-challenge those areas. Mid 80s now, or pushing mid 80s out in the summer months. If, again, like in cattle, if we see corn prices and grain prices continue to stay high, that could limit any expansion, keep weights a little bit light. If the demand stays strong, that side of the market might just be getting started. So I'm a little bit optimistic where we could be in the summertime in terms of where these hogs could be, and maybe get up and push into that $90 value. But that might take a little bit of work to do here, and as we fight through these front months and these heavy supplies.
John, any final thoughts for us today here as we look at Thursday's trade?
We got a lot of things going on here between geopolitical in terms of what's going on in Washington, D.C., as well as these markets. And, money seems to be flowing everywhere. And there's a lot of optimism that the dollar is going to continue to tumble. That's going to be the key trend, I think, for 2021 is what happens with the dollar index. We're watching funds step into these agricultural markets. Now, if we get the dollar to break back to those 13, 14 levels, who knows what happens with prices? Do they go back to those levels? And then on the other side, too, watching what crude oil is doing. We got a nice breakout in crude oil yesterday. That can lift the entire commodity sector. I mean, right now, it's just got this general feeling, it's going to be choppy. It's going to be volatile. But if the currency trends stay where they are, the right side to be in the ag markets is probably going to be on the long side.
John, if producers want to reach out to you and get a little advice, what's the best way to do that?
Sure, I'd love to chat with them. Feel free to give me a call at 800-334-9779 or shoot me an email at johnh@totalfarmmarketing.com.
John, appreciate the time as always. Have a great rest of your week and weekend, and we'll talk to you next week.
Thanks, Jesse. Always appreciate your time, and have yourself a great week, everybody.
John Heinberg with Total Farm Marketing by Stewart-Peterson, our guest today here on Market Talk. That has been the Thursday, January 7th edition of the show. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.